Uh, let's start my personal presentation for financial analysis of Nike. So first of the I just introduce myself. My name is Yuxuan He. I'm from China. I'm from the GCU, and my major is financial management. And and let's start it about my presentation. Let's first talk about the company description. Nike original structure is mainly and has continued to use the matrix organizational structure. General manager of board of directors, deputy general manager of product department, deputy general manager of product department B, deputy general manager of region A, deputy region manager of region B. Headquarter functions are planning, production, finance, marketing, research, and development. The Nike strategy is Nike is well positioned in industry segment and markets, and often has a lending of significant market share position. It has a clear long-term financial far and possessions resource towards her largest, most profitable business and innovative and developing markets that offer the greatest opportunities of growth. Nike has also taken steps to reduce cost and focus on the use of environmental friendly materials. Today, Nike has become the global market leader in the sport footwear and the sportswear market. And the risk factors is the most important thing is the Nike need to range empathy with customers and be close to customers. Nike starvation sales model made it difficult for ordinary customers to buy their favorite products. It also needs to ensure that its employees have always been aesthetic and maintain the progress level to encourage employees to keep moving forward from high-level design developers to front and sales specialists need to maintain high enthusiasm for work. And we're gonna move to next page. We're gonna talk about a profitability test. The first one is a profit measure, and we can talk about the data. And profit measure is a measure of profitability. Is in the past 5 years, Nike annual profit measure has remained basically stable, but in 2018 and 2020, the profit margin has fell below 10%. This is because 2018 was the rise of major brands and the impact of the COVID-19 in 2020 led to profit margins decline. And we're gonna move to next. The next is earning per share. Earning per share is shows the efficiencies of earnings per share. The data of Nike's earnings per share has fluctuated greatly in the past 5 years, and in 2020 has dropped greatly due to the impact of the epidemic. It may be due to charges in the global market to our environment and some economic factors rather than poor company performance. And next, is return of equality. The ratio calculates the return pair equality stake. The ratio has fluctuated considerably by over the 5 years period, again being hit by different factors and is more reliable than EPS when comparing a performance of different companies. And next is return on assets ROA. The ratio shows how effectively a company converts assets into earnings. The proportion of Nike has been declining since 2017, which is a lot of to do with the rise of various sports companies during this period. And next is quantity of income. This figure measures the portion of income is generally by cash. By comparing all the resource, we can see the ratio has declined a whole in the past 5 years, which means the Nike still needs to improve in cash flow and the operation process to prevent bad debt from being able to recover cash. And next is fixed asset turnover ratio. Fixed asset as a turnover ratio measure a company ability to generate sales given its fixed asset investment. When company Nike, PP and E, there are clear downward trend in 2020, which may reflect Nike's efficiencies. And the next, we can talk about a liquidity test. The first of the liquidity test is the current ratio. Nike current ratio has been about like 1 in all 5 years, and it reached 2, which means it's fully able to pay off debt and has enough cash flow. Also, the data has fluctuated in past 5 years. And the next is quick ratio. The quick ratio shows the stable level of Nike liquidity. This is a more reliable ratio than the current ratio because it takes into account fast moving assets and included inventory that may not be convertible into cash. And the next, we're gonna talk about a receivable turnover ratio. It shows Nike low receivables turnovers. It shows Nike has been risk for a long time and has low credit worthiness, which increase the risk of bad debt. Next, we're going to talk about inventory turnover ratio. Inventory turnover ratio is a company inventory moves through the production process to customers more qualities. And next is a debit to equality ratio. According to the debit to equality ratio, for every dollar of shoulders equality, a high ratios in this case, the Nike relies on funding from creators, which increases business risk. And next, we'll talk about time interest earning ratio. The multiplier interest income ratio compares the income generated by Nike with its interest eligible generations for the same period. The first high ratio in 2021 represents margin production for creators. And next, we're gonna talk about common side income statement, the balance sheet, and the income statement. Actually, the first one is also including Nike continued attempts to acquire some small companies during this past 5 years. Finally, they announced acquisition of various Nike's company RTFKT at the end of 2021, taking a solid step towards the metaverse into the virtual world, the NFT product has gradually become stronger, and Nike moved undoubtedly the first shot, marking as the official enter of the sports product trend into the metaverse. It also paved the way for substantial increase their income in the future. And next is common size balance sheet. Most assets liabilities and our shareholders' equity have remained a stable percentage over the years. The main Nike has purchased more equipment in recent years, so its accountant dispersion has also increased. Compared to 2020, Nike occurred increased by about like 13.49%, which long-term debit fell about 100%. However, other non-current liabilities continue to increase, and the difference income increased by about 30%, with a longer fluctuations in the previous year compared to 2019. And we're gonna talk about DuPont analysis. The final result is in 2017, 2019, and 2021, the ROE was relatively flat, where the ROE in 2018 and 2020 dropped significantly compared with the other 3 years. Indexing in the company was heavy impact in the other side world. On the other hand, the leverage ratio currently from 2017 to 2021 has gradually increased, suggesting the ROE is moving more sensitive to change the leverage ratio. And for some reason we don't talk about recent news. The recent news is Nike found a company named RTFKT, which is launched a service to create virtual products such as a sneaker and use blockchain technology to ensure authentic. According to the village, RTFKT teamed up with 10 artists focused in February to launch 3 NFT sneakers priced at $1,300, $1,500, and $10K, and sold about 600 pairs within 6 minutes, netting over 3.1 million. And we have some recommendation for company Nike after a series of ratio analysis. Considering various factors, we remain investing in Nike. The decision is based on a ratio analysis of the company performance over the last 5 years. Most ratio reflect a company financial health abroad of volatility. That's on the risk. The profit margin shows the Nike profitable fluctuated greatly, but in terms of the year of increase earning per share on the return on quality, also rising report between 2020 and 2021. The rate of increase is relatively large, and there is a continuous upward trend. And in terms of marketing strategy, Nike and undoubtedly successful. They have been used hungry marketing to make customers pay for it and never stop. As far as the net profit margin is concerned, only in 2018 and 2020 during the 5 years period, due to factors such as other sports brand and a new crop epidemic, it was lower than 10%, and the others were stable between 10% and 15%, indicating the Nike has stable profits and a stable industry chain. From the point of view, we decided to invest in Nike companies. So thanks for watching. Thank you, Professor.